then do you recommend low cost ETFs like Vanguard or VTI, VOO or VTI in picking individual companies? And I would say that we have at our firm spent some time trying to understand precisely what the risks might be in the ETF market. And what we discover is that there are a group of firms that trade very large pools of capital that underlay the ETFs. The ETFs do not at any point in time have to actually reflect the value of the underlying securities. And oftentimes they do not. And in periods of illiquidity, you're betting that those firms are able to stand up and make these massive trades when presented with the requirement to do so. It is in fact not a requirement, it is an assumption. So we are in a huge minority. We don't use ETFs. We think the simple index funds are a little better than, and the cost to own them in the long run is really de minimis. But I'm not opposed to using ETFs. I'm just saying it reminds me a little bit of what we had 30 years ago called portfolio insurance. And what happened with them was that as the stocks ticked down, it triggered more sales. And I think the same is a possibility in ETFs. But the idea of having some instrument which mimics the market is a perfectly reasonable idea.